As the trading week kicks off, Ric Spooner of CMC Markets is on the line now to give us his views on the key events that will be shaping money markets this week. Firstly, Ric, what market sentiment are we seeing following Friday's US NFP jobs data?
Look, I think the market was generally pretty happy with the jobs data from the US on Friday. It looks very much as though jobs growth is back on track, and I think to return to an average of 200,000 per month or better. And in turn, I think that gives comfort for outlook for a 2014 GDP growth of 2.75% or up towards 3%. And that, I think, has the market looking towards the first Fed rate hike occurring in the first 6 months of 2015. All that said, we saw a little bit of a softer tone in equity markets here to start with in the Asian zone, and that's carried through. But I think that's probably got more to do with the unwinding of some pretty hefty valuations on tech stocks and the consequent decline we saw in US equities than it has about any reaction to Friday's jobs number.
The Bank of Japan meets on Tuesday. While no change is expected to interest rates, are we likely to receive any hints of further stimulus? And what could this do to the US dollar-Japanese yen pairing, which continues to bounce around following last week's sales tax hike?
I think the market is or has worked itself into an expectation that the Bank of Japan will either do something or certainly signal some action. I think the timing is seen as being right following the sales tax hike and probably some need to just supply some confidence to the consumer and the Japanese economy generally as they deal with increased sales taxes. So there is an expectation, I think, that we'll see the Bank of Japan increase or announce an increase of its purchases of exchange-traded funds and quite possibly a further increase in bond purchases, although that announcement may not be made until July. That said, though, again, we are seeing a bit of weakness in the US dollar in the Asian time zone today, and that might just reflect a little bit of a buy the rumour, sell the fact, or sell the rumour, buy the fact situation where the market's beginning to perhaps just buy the Japanese yen a little bit in anticipation of a pretty modest announcement by the Bank of Japan tomorrow.
Another FX mover is the release of US FOMC meeting minutes on Wednesday. Given the generally damp outlook on Fed Chair Janet Yellen's performance at the last FOMC meeting, will these minutes be under greater scrutiny than usual?
Well, it's probably hard for them to be under greater scrutiny than they normally are. Of course, they're intensely watched. Look, I think there is a sense that Chairman Yellen sort of corrected the tone or reset the tone for market expectations as to Fed policy after her last speech, in which she made it pretty plain that despite her early response to a question in which she talked about explicitly about a timing of February next year for a rate hike, that the Fed remains very much data-driven, that their mindset is very much one of leaving accommodation in place well and truly long enough to ensure a good recovery in the labour market as long as inflation allows them to do that. So I think probably no real change to that sort of outlook expected in this week's document, but as always, there's always the prospect of further colour around what the Fed's thinking about and discussion by the governors and perhaps further colour on the minority view on the Fed.
With the ECB's Mario Draghi acknowledging on Thursday that QE was not out of the question, will this week's ECB monthly bulletin, released on Thursday, suggest just how prepared the central bank is to take that step?
We might get some insight, but it's difficult really to assess how far the ECB might be in this process of looking at further easing and possible quantitative easing. But again, a bit like the Fed, I think the tone was set by Mr. Draghi's most recent comments. He made it clear that the ECB does not exclude the possibility of further easing and indeed discussed actual quantitative easing. So even if there's no further information at this week, I think that the market does see a clear divergence now between their outlook for the Fed and their outlook for the Bank of Japan and the ECB. And that's being really driven by the market's outlook for the economy. As we've just discussed, I think with those good non-farm payroll figures, the market is looking forward to the beginning of the Fed's tightening cycle, and whatever might be said by the Bank of Japan or the ECB this week, it's unlikely that the market will change their view of an easing bias by those two central banks. And that certainly sets up the possibility for the US dollar to continue to rise against those other two currencies.
Thanks, Ric. Stay tuned to Dukascopy TV as the team will be covering all of these events and more. From me, though, it's goodbye for now.